Yes, 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 yes. Come on, man. What's up? This one feels a little too close. Why does it feel so close? Come on, man. Let's talk about risk. Man, I was just having some great conversation about real estate risk. Risk. So the definition of a concept called asymmetrical risk. Have you ever heard this term? It's a finance term. If you were to study finance in college, hopefully you've heard of this term, asymmetrical risk. Let me give you the definition before I slaughter it. Wikipedia says those chimes are really loud, huh? Well, you're just gonna have to deal with the noise, man. An asymmetrical risk, also called an asymmetrical return, is a set of possible results of an investment strategy where the upside potential is greater than the downside loss. Derivative contracts called options are the most common instrument with an asymmetrical risk, meaning when they place the bet, they're looking at what can I lose compared to the upside. And if the upside is big enough, it's good. It don't matter. We got Fat Cat. Yeah, we got Fat Cat back. What's up, baby? What's up? He lives outside. Anyway, that's Wikipedia's version of an asymmetrical risk. Now, I'm going to give you a different way to look at it. Here's what I'm saying. You need to, in order for average people to level up, in order for you to make money, in order for you're going to need some outside returns. Now, you could do the index thing. You could do that. So an index fund is giving you, what, 9% a year on average. You just push money in it. What's the downside? What is the asymmetrical risk of this? Will the S&P 500 go to zero? Does it go to $0? No. So the risk, the asymmetrical risk is, if we look at history over time, it's just gone up. So you're playing a game you can't lose if you believe in the game you're playing. There is no risk of zero, unless you believe there's a risk of zero. Now, if you're one of the few people who believe in something that's never happened, but you're convinced that is going to happen, then you have to put that belief into asymmetrical risk. You have to put it into what it is you're doing to try to become rich. And some people, they'll get an idea and they just go all in on gold. And all they bought is gold. For 20 years, they've been buying gold. I don't know. Some years, maybe that looked better than other years. I don't know if that's getting you where you're trying to go. That could be part of your risk scenario. You could buy into it a little bit and you say, well, I kind of buy into it. I got a little conviction on it, so I'm going to put some money on it. But you're never going to get ahead unless the thing that you're doing that with, can do this, right? It's got to be alive. It's got to be organic. It's got to move up and come down. I need booms and busts, and I need opportunity. See, what other people see as volatility or risk or downside is actually what makes you rich. It is the fact that some people don't pay their mortgage, that we have the wonderful, beautiful thing called the foreclosure, where a guy like me can come in and buy your shitty problem, buy it from you, improve the neighborhood, invest money, fix up the house, and what is there? There's risk. And so I got to value the risk of this. Well, here's what I know. This is what they do, man. This is what they do. So if I know this, I know things go up and I know things go down, I can begin to plan, right? I can begin to try to manage risk. How I'm going to deploy assets, how I'm going to deploy money. How am I going to deploy my time, man? How am I going to do my time? If I work at Walmart, how do I get to $100,000? Seriously. I don't care who you are, where you're at right now, what's your age, your race, your financial situation. This has got to be your target. I don't care how you do it. I don't care how many hours a day you work. I don't give a fuck how bad you feel doing it. That is your target. If you don't have this, this is all you should be thinking about if you're trying to get rich. Because once you get $100,000, do you understand you now have enough money to actually do something that could change your life? But you're going to need asymmetrical risk. What is another definition? Oh, here's the definition of asymmetrical. You're like, what does that mean? Having parts that fall to corresponding to one another in shape, size, and arrangement, lacking symmetry. Meaning, it's not doing this. It's doing this, man, right? All assets, gold, bonds, real estate, interest rates, they go up, they go down, based on all these factors, and we don't know why it's gonna do it. You're not that smart. This is where smart people trip themselves up. Instead of just making asymmetrical bets, they're trying to be right all the time. Figure it out. Their fears overcome them. Fear, indecision, doubt. They're like, oh, what if this happens? And maybe that. And what if blah, blah, blah. And none of that actually gets you in the game of making money and playing. Fear is one of the worst. Having parts to fail, or we just said, correspond one another. Now, if you have my book, The Money Flow, I don't know why you wouldn't. If you have my book, The Money Flow, it's more than about stocks, man. You'll let it be. This is a pattern. Booms, bust cycles. This entire book teaches this idea that prices move in 4 stages. We don't know how long each stage lasts. Nobody does. Not even trying to determine it. I don't know how far Bitcoin will go or how low to go. I have no idea. Here's what I know. I know that it does asymmetrical gains. Meaning, over its entire life, the upside has been astra-fucking-nomical compared to the downside, which has never been zero. Let that sink in. The upside has been astra-fucking-nomical. The downside has never been zero. So you're playing a game where it's never gone to zero. So we could take that off the table. Meaning, if you put $1 in tomorrow, just $1, it's never going to zero. Never. So if we remove that from it, then what's the asymmetrical risk? Well, we know busting out isn't one. We know zero's not one. So if I go buy a house, is it going to go to zero? No. Could go down. I bought some shitty fucking houses and still had to pay a lot of money. In other words, you could be a complete dumbass. You could run your house into the ground and they'll still pay you a lot of money for it. It's crazy. So their asymmetrical risk isn't zero, right? Unless you leverage yourself. Oh, now if we start leveraging, things get different, right? Where are we at on time? Man, I can't give you guys all this shit. The point is, when you begin to think like I'm talking about, and you combine that with getting the buckets right? Getting your mindset right, getting your enthusiasm, your work ethic, and everything behind it, combined with this idea of the millionaire mindset, and you like sit around and think about risk, and you're like, well, what is it called? And you're like, asymmetrical, and you begin to look at it, and you're like, holy fuck, people have been studying this? What's the other one I found that was interesting? An asymmetrical payout, well, we read this one, right? Oh, it talked about hedge funds, this and that. The plain definition, asymmetrical risk is an investment scenario where the potential for profit loss is imbalanced. The risk is not equal to the potential reward. Meaning, if you look back over history and there's times where it's gone extremely high and you're getting it for extremely low, guess what? The risk reward there is different than if you're buying it into a 70 RSI. So when I talk about don't buy on a 70 RSI, I'm not making the statement that it can't go higher. I'm making the statement that the asymmetrical fucking risk is off. It's too high. So you're on the wrong side of the curve, man. If the goal is to level up, not be right, but the goal is to level up and not chase money, if the goal is to actually fucking level up and get rich, then this is what you're doing. You're looking for the asymmetrical. You're looking for the bet where the return is astronomical compared to the loss. And the moment you figure that out as a normal person and do it every day you do this game. You wake up, and part of the reason you got out of fucking bed was to play this game. This is why people stop trading. You never started fucking trading. Fuck out of here. People quit real estate. Yeah, you never started real estate, dude. You didn't get your ass up, turn the computer on, and do it every day. You didn't manage risk. You didn't develop a written plan. You didn't have a goal. You weren't committed to it. So you can't start trading in less than a year you quit, because that means you never started trading. You did some other bullshit. So the goal to get to $1 million, we said 100,000. Okay, that kind of makes me fucking sick. Your goal's $1 million. I don't care who you are, what you do, what your age is, how old you are, how much money. Don't give a fuck about any of your excuses. This is your goal. $1 million fucking dollars. See, once you establish the goal, you go, wow, that's a big number. We have to, what is the obvious next statement? So if I say, well, my goal is to get $1 million, you're actually closer to it. Just saying it. Just by the fact that I said, I want $1 million. Really? Where would you like to put it? What do you mean? If you had $1 million, where would you put it? I don't know. Then you can't get $1 million fucking dollars. Like, you have to think it. So if you've done my thing, the 17steps.com, that's what I'm trying to get you to. That all of this stuff starts first with you thinking it, writing it, holding it, and then you start doing it. And the moment, and each of those steps get you closer and closer and closer, and then all of a sudden, you have 3,000 that catches a stock that goes up 300%, right? 300%. And you turn that into 9. Plus, you continue to invest in yourself, not only your mind, body, soul, right? You're investing in you. What do you think church is about? Instagram go off? What the fuck? What's going on with Instagram? Come on, man. It's going off, man. Instagram keeps going off. What's up, fat cat? Hey, hey. Enough. Ow. Somebody's going to get this golden ticket right here. Yeah. I'm going to start giving these golden tickets out, man. And you redeem them whenever you want. I'm going to mail it to you. You redeem it. You get to redeem it one fucking time. So don't call me with some bullshit. So you got a house, you got this, you got that. You want to ask me a question, you use that ticket. And when you give it to me, I'm going to then give it to somebody else. And I'm going to have about 30 or 40 of these floating around America. And when you use it, you got to send me the shit back. You got to get on that list to get it. You got to get on that list to get it. So we can talk whatever, man. I got a couple $1 million in real estate. I trade stocks every day. I got about a whole lot of 100,000s. Almost right at $1 million in the stock market, okay? Right at about $1 million. In stocks, in various forms. Stocks. Now, I only put about 200 of that. If I was being honest. Of that $1 million, I put maybe 200. And I'm guessing there, to be honest. I'm guessing. I didn't track that. When I started buying this, I was calling in trades on the phone, man. Not on the internet. You bastards just click your thumbs. That's how hard it is. Free, click, click, click. We had to pick up the phone. Like, you had to mail in an application. It took 7 to 14 days for your account to get approved, and then you got to call in the trade on the phone, man. You got to get up, and you got to do it just right. So you'd sit there, and you'd be all nervous, and you'd write your trade down, and you call, yes, Mr. Broker, can I get 10 shares, excuse me, huh? Oh, yeah, hold on. Wait. And then you go back and forth with this idiot on the phone, man. For each fucking trade. Dude, I do 10, 15 a day if I get going. I mean, not really, but I could. You know, and then once all of a sudden electronic trading came, I began to increase it, right? Spread my money around, look at different things. What am I doing? Looking for asymmetrical risks. So every day as I have money to deploy, I want to have all these options. See, once you give up different options, I get people do this a lot. Well, Gerald, I've got all these stocks. I'm going to sell all my stocks and I'm going to roll it into real estate. Okay, dude, but now you don't have any stocks. Why don't we have houses and stocks? Why are we so fucking limited? Get it? Like, there should be some stocks you don't touch, bro. They're not there to fix your problem. You need to keep them because they're an asymmetrical risk. Because over time, compounding these will make you $1 million and you only put 200. Did $200,000 over 20 years keep me out of real estate? No. Okay, over 20-something years, I made a lot more than $200,000. So if I put that into stocks, did that keep me out of real estate? No, it didn't keep me out of real estate. It made me $800,000, man. Now another guy said, well, you should take all of that and go buy an apartment. Okay, but now I don't own the stocks, man. The way I got to the $1 million was not doing that. Same thing with the real estate, man. Same thing with the real estate, man. Same thing with the real estate. So you only get to 15 houses by not selling houses, right? When do I want to buy them? When the asymmetrical risk is good. When the house is beat up and I can put my advantage. What's my advantage in real estate? I only got one advantage, man. It ain't being smart. I'm not smart. The only thing I have going for me, hey, leave that kettle on. This is all I have going for me. Credit, which I guard, easy to do. 2, I'm a saver, right? I'm really not a saver, I'm an investor. I save to invest, that's the only reason. That's the only reason I save, to invest, right? And then number three is I'll just work. That's it, man. That's my big real estate secret. And then I go find stuff that's on the downside of the curve, you know. And it doesn't have to be perfect. I just need a deal. Doesn't need to be the right deal, perfect deal. Just needs to be a deal that cash flows. I'm trying to store that money. I'm trying to allocate money on the curve when it looks like a good deal. And that could be, now let's say that I'm doing this. Oh, by the way, I got $50,000 in REITs. There goes my paper. So I got $50,000 in REITs. That pays what? 8, 10, 12%? God damn it, why does this keep going on? I don't know why this keeps going off, man. I don't know why it keeps going off. We can watch the video. Go back and catch the video, man. Don't be texting me if you're a dick, okay? That's probably half of you. Don't text me if you're full of shit, right? We're gonna get out some golden tickets, man. So where's the asymmetrical risk right now? That's what you should always be asking yourself. Where's the opportunity right now? I wake up every day and I think that. What should I focus on with my time, talent, treasure right now? What has my attention? What is one or two stocks that I really like? I've been saying Uber a lot. You hear me? What am I doing? What you think about comes about. It's front of mind, man. I need more Uber, man. I need more and more and more fucking Uber. Why? Because it's trading almost at a 50% discount, in my opinion, over the next 3 to 5 years. During that time, this is what people miss. You said, oh my God, 3 to 5 years? Oh, that's so long. I know, it's not the only risk we're playing, bro. Guess what? Some of these I started 3 years ago and now they're really high. So some of the houses I bought 5 years ago, they're really paying off now. I can go back and pull equity out and what? Play this game. Well, I can't go back and pull equity out if I sold the fucking house. I can't have a stock go up 500% and it's still paying me dividends if I got rid of the stock to go buy a house. Right? So that's a conundrum, right? But I only have this. No, you're in a limit. You have other options. You should be planning for that now. I mean, in other words, today, how are you going to keep this shit and go buy new shit that pays you more, that appreciates, that grows, that you can pull money out, right? This is what you have to wake up thinking. So my friend Rick, he owned 128 houses. 65-year-old man. Every day he gets up, it's to grow this number. To grow it and to protect it. We got a cat fight. Hold on. Hey. Yeah. Interruptions, man. Life will try to interrupt you, right? Death, divorce, disease, disinterest. A lot of you guys say, I want to trade with Gerald. Bullshit. You don't have the attention span 90 fucking days. Most people can't make it through a 90-day fucking cycle. They've already allowed the world to capture their mind. I don't have any more money. I can't hear me. It's something. They allow the world to steal their interest, man, to steal their control. So if you want to get to $1 million at a young age, I actually have some people who sometimes say, why would you think about that? Don't you know that money's not happiness? Man, I didn't say shit about happiness. I said a fucking goal. Some people want to have a six-pack, right? Some people want to visit every state. Some people Want to write a book. God damn, what's wrong with having goals in life? Why can't my goal be $500,000? Why does that got to fucking bother you? Like when you say that out loud, that bothers people. You say, man, I want $1 million. What? It hurts people. They don't like that. Why? Because they know they can't do it. They don't have a vision. They don't even have it written down on paper. See, the very act going from, I don't know how I would do that, to writing it on paper, studying different avenues, begin to applying yourself in that direction, picking one, and then getting up every fucking day to do that, to live that, to confirm that, to do that, guess what? Your life's going to open up in such a way, and people are going to come in, and situations are going to happen, and opportunities, and guess what? You win. That's how it works. You got to make the move on that, though. Whenever, like I've been talking a lot about Bitcoin. Why? It's half price, dude. I don't know if people are just stupid. I really think most people, and I don't mean your intellect. There's a lot of smart, stupid people. I know a lot of smart people. They don't have $1 million. Most of you on here don't have $1 million. So it obviously involves doing something more than you're doing, right? Can we all agree to that? Like, I don't have $10 million. How do I get to $10 million? Is it even mathematically possible? What could I do to take my... Drop my cap. What could I do to take my 3 million? For you, maybe we're trying to get to 100,000. You don't have 100,000. This is your goal, man. 6 figures. 6 figures. Till you get there, everything you're saying is bullshit. This is easy. This is easy. I've helped hundreds of people go from a few $1,000 in the bank to having a portfolio of over $100,000. I put one on my story last night. All that guy had to do was stop doing what the fuck he was doing and begin to pay attention to what he was doing, right? And to get his buckets right. Attack his debt, get all that shit in order, start working on credit, start putting that money into the stocks. You don't need to be chasing... You guys buying Dogecoin and you don't own Dogs of the Dow? I don't know, man. I don't know what to say. I'm talking about adults there. I get children doing crazy shit like that. And it's not crazy. I'm not saying don't own it. I'm not saying don't own it. Own it. But own it out of abundance. Meaning you got the foundation. That's like you're going to run out and build the roof. You're just going to go from mom's house to Bel Air. Like, that's your plan, right? The problem is that only works for like 0.0000001 people. So while you're bullshitting with that, putting your mind on that, you're not learning the real things that make real people rich. That's the problem. So as you chase this dumb shit, this is what you're missing out on, is you're not putting your heart, soul, mind, and fucking focus on the things that actually do work. That if you do them, they work. But instead, we get sidetracked. I call it the straight line, right? Straight line, you ever heard me talk about the straight line? Meaning anything that's not straight line's not taking you there. Now, if your goal is to get to 1 million in Dogecoin, then good, go do that. Right? And maybe that works. And maybe that's a good asymmetrical risk. Maybe you're like, fuck it, it's just 10 grand. Fuck it, put it in there. But here's the thing, then do it. And shut the fuck up. And when you lose, good. It's called an asymmetrical risk. If you win big, good. You deserve it. You took the risk. Makes sense? It is hot as fuck out here. Text me, man. Don't text me if you know. If you ain't like me, don't text me. I'm already surrounded by too many fucking weak, fucking lying, weak-minded people. My goal is to help them. My goal has always been to help people. The money flow system on page 1, we're talking about asymmetrical risk. We need to get you to, okay, let's say you don't, 100,000, you're like, Gerald, you're out of your mind, 100,000, then it's, come on, man. My 9-year-old had this, okay, come on. We all got to have 10K in a brokerage account. I mean, come on. Like, if you don't, that's what you need to be saying to yourself, come on. Everybody says, come on, man. I don't know, man, I got to get 10 grand. Like, that's it, that's your only focus. So I just put a bid in on an offer on a house. Guess what my only focus is? Getting this house. Then I got to get it fixed. And I got to get a renter in it. Like, you see what I'm saying? Like, this becomes an obsession of mine. So every day I got to think about this. So if you own stocks, you should look at them multiple times a day. You should be looking. Where are they at on the 4 stages? If they're going down, that's fine. I mean, if that's the game, if we're playing the long-term game. So if Uber goes into another stage dive, good. Shit, I'm going to buy it at 42. I'm not fucking kidding. I'm buying a shit ton of Uber. It is 50% off, still. Now, I bought a bunch of it at 18, and I was completely right. Okay? And when you say, what do you mean? I mean unreasonable amount. Like, that's probably too big a position. If that's fucking wrong, I'm going to pay for it. Like, I can't go do that thing this weekend because I bought fucking 22 shares of Uber. I'm actually broke. Like, I'm dead fucking serious. I have to get a bunch of this. Why? Because I have a very short window, man. It's asymmetrical. Soon other people realize it and the pendulum swings and it goes the other way. You might be cool waiting. I'm not cool. I'm not cool with that. Same time, I got another one going, Bitcoin. You remember I was buying bonds last week? I'm sure they pulled back today. So what's a big couple of them that I have going right now is what? TMF? What is this? Bonds, right? I'm in a full position. I'm not putting any money in that right now. If this comes down, maybe I'll reevaluate it, put some more. But I'm never getting so big in this that this changes the way I eat. In other words, if I completely fuck this up, okay, that hurts. If this goes to 0, all right, that's asymmetrical risk, meaning I understood that when I bought it, man. That's off the table. Fuck it. Whatever. That's not happening. This is not happening. If I thought that for a fucking second, I'm out. If I thought this for a second, if I really thought that it's possible this goes to 0, then like say Dogecoin, like that could. If you don't think that, you're stupid. It could. Now Bitcoin, no. That's just a guy talking. Now that with that said, it could go 10,000. Fuck, I don't know. So the asymmetrical risk might actually be good there, man. That actually might be. You should maybe take $1,000. Fuck it, throw it at it. But then guess what? Now leave it there. It ain't affecting your life. It becomes part of this number of you trying to get to 100,000. Shit, all you gotta do to get to 100,000 is buy one fucking rent house and put some money in the dogs of the Dow stocks and just do it every fucking month for 18 months. You're gonna have 100 grand. It ain't hard, man. This number is super easy. Getting to $100,000 is just about focus, changing what you're doing. I mean, you get one house, you put 25,000 in it, and you go get 10 stocks, right? And you just start putting money in them every month. Check. Might have to save up for a minute on this. And then you hold these two, continuing to put money in there, right? You could have it in an IRA. You could just have it in a brokerage account. It doesn't have to be fucking fancy. You ain't got to be complicated. That's what I'm saying. There's a lot of smart people not doing this. Oh, they're brilliant. They know all about all kinds of dumb shit, but they're not doing this game. And so they're 35, 40. They don't have any money because they don't have shit that goes up. Having things that go up has nothing to do with your intelligence. Now, you could take your intelligence once you've applied it to shit that goes up, and you could begin to use it. Maybe you have an angle. Maybe you understand restaurants because you work at one. The fact that you would work at a restaurant and not be investing in restaurant stocks is dumb on steroids. Like, you're not even using the gifts and skills and the process and the world around you that God has already given you, and you're looking outside of it. Meaning your wealth comes from where you are right now, what you start doing, how you begin to see the world right here, right now, right this second. So I see it as a fucking oyster. Dude, there is shit everywhere. When I get in that fucking truck and drive and turn that corner, all I see is rent, 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 equity, flip, rent, gas station, dividends, turn the corner, public storage shit. Oh, land, lot. It's everywhere. Money is fucking everywhere. It's on your phone. How many people a day check the price of Bitcoin? Everywhere. Fucking opportunity. So if those people are scared and it drops in a half, and I believe in this thing called asymmetrical risk, meaning in order for it to be asymmetrical, it has to move. If there is no movement, if there is no up and down, there is no money to be made. So you need violent drops. So anyone that's a reason they can't invest will never get fucking rich, ever. Because it's not inside of you. If you fear price movement, that's like saying, I want to be a fighter, but man, don't hit me. Don't hit me. I want to be a cop, but man, I don't ever want to shoot anybody. Then don't be a fucking cop. That's called asymmetrical risk. We had guys when all of a sudden we in the Army, the war kicked off, they didn't want to be soldiers anymore. What the fuck do you think we've been doing here, bro? Like, and then guess what? All of a sudden it came to it, they couldn't do it, right? Asymmetrical risk. So you guys want to trade. A fractal's never-ending pattern. Fractals are infinite complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over and over again. Science of Getting Rich says what? Basically what it said right there. That if you do things in a certain way, what is a certain way? Over and over and over. A pattern. That's why I tell you, you want to be a good trader, you got to read the book Science of Getting Rich. Because it changes the way you begin to see things. So Bitcoin falling 50% becomes an opportunity. I mean, what else would it be? Hello? What else would it fucking be? Now, if you don't notice it, you don't see it, it's because you're not looking. So the moment you begin to look for stocks, good companies, like big ass fucking billion-dollar companies that make real money that people actually use. Like those companies. Guess what? You can find them all the time that are on sale, 50%, 60%. They just haven't realized it, especially if you got 3-5 year windows. You take 10,000, turn it into 50,000. You can't turn it into 50,000 if you fucking sell it. And if inside of that you understand asymmetrical risk is that what? Price moves in 4 stages. And you get rid of the idea, well, the 4th stage down, that means I got to get out. No, it doesn't. It means now you understand price movement. Now you can begin to actually target your time, talent, and treasure and pick up the most valuable of things on sale because they go up, they go sideways, they come down. And when you get on the other side of the risk spectrum in that you're using it to take advantage of other people, good, you had a foreclosure, it's my house now. Now, another guy might say, well, wow, that's rough, man. Yeah, dude, I don't know his problems. But if you want to have cheap houses, you're going to have a foreclosure market. If you want to protect your banks from going bankrupt, people have to pay their payments. And so there's this giant fucking thing called the money flow, this money system out in the world. And as you watch it, guess what? Mortgages go on delinquency, and there's all these indicators and statics and statistics and things you can look at. And if you want to play that game and try to intellectually get ahead of everyone else, good luck. Very few people are famous because of their fucking intellect. They just sat around, thought up something and did it. Very few people. That's not how average people get rich. At all. You know how they get rich? They buy shit that goes up and down. They buy bunches of it. It goes up, they borrow against it. So if you own houses free and clear, housing prices shoot real high. You don't have to sell it. You can borrow against it. You don't have to borrow all of it. People are like, oh, well, you're leveraged, you'll blow yourself out. You don't have to borrow all of it, dude. So if you have 10 houses paid for, you say, well, how could you have that? You pay 3 mortgage payments a month? You invest in them? Put all your money every month into one house. Just keep doing it month after month after month. I've done this a bunch of times. Like I would have a big score, do something, make 30 grand. I'd walk in and pay a mortgage off. I don't have 30 grand anymore. But guess what? I got a lot of cash flow. I have the 30 grand. That's what people miss. They're like, well, you lost your money. No, I didn't, dude. It's right here. I'll come get it in 5 years. Hold it for me, Mr. House. 2 years go by, I buy this one, we tap this one. Maybe we take all that money and go put 25 G's in a mortgage REIT, A, G, and C. Maybe I tap 3 or 4 of these and put 200,000 in here that pays 8%. I don't worry about it. I just take my money, just collect my check. Guess what I'm gonna do with the check? Let them hit the bank to what? Buy more houses. I'm not going to use my money. I don't buy investments with my money anymore. My investments buy investments. I just spend my money. So if I sell you a book, look, you buy this book right here, right? 77 bucks. And I'm going to show you how to trade. I'm a good trader. That's how I went from 0 to $3 million in 18 years. I'm probably not a good writer. It's just I play this game every day. Every fucking day. So anytime you get a distraction from being on this, for whatever reason, just think about that I didn't have that. I mean, I didn't allow that. So during the time that I'm buying these, I have divorces, family members die, lawsuits. I've been sued 3 times. Car wrecks, sicknesses, cancer, all that. Business went out of business, closed it. I've had 4 different full-time businesses that they had nothing to do with this shit. Me out working, a lawn care business, just working every day, hustling. Why? The only reason I go to work, the only reason I do anything is to buy these and stocks. That's it. That's how I see myself. Gerald Peters is a holding company of assets that produce cash flow that go up. That is my entire existence. So if I want to get in the snow cone business, how does this help me do this? That's the only question I have. Can I sell enough snow cones that I could buy more real estate or buy more stocks? And if the answer is yes, hey, let's do snow cones, man. Yeah, woo, snow cones. You see what I'm saying? I don't care what it is, man. The goal is this. How I get there, I could be an engineer, a pilot. I don't give a fuck, man. So they said, what do you want to do for a living? I want to have a bunch of money. What do you want to do? Yeah, we ship to the UK. Come on, man. How the fuck am I going to do it and can't ship to the UK? Like I'm stupid or something. I'm teasing, bro. Hey, don't text me if me calling you dumb. Because I'm prone to call my friends dumb. I get called names too. It's all right. I used to work at a prison, man. A lot of people wouldn't make it in prison. Chapter 5, support and resistance, supply and demand, super important. So my new book here we're working on. The 2 selves, the struggle. Your other self is 10 foot tall and bulletproof. Your other self is healthy, wealthy, and wise. Wisdom rewards people with wealth. Everyone is a plural being. Everyone has 2 selves. Some people have even more than 2 personalities. I do. I have a negative side and a highly keen, aware, positive side. I also have kindled within me a boy, age 14 to 16, who never grew up. He sees the world through rose-colored glasses. That's from the new book, man. It's going to be cheap, but you got to read it. There's a page here. Now, some of this is going to be corny, okay? So don't read it around people that'll laugh at you, okay? When you get my new thing, this is not expensive. This is cheap. When you get it, when you read it, you're probably going to want to read this by yourself, away from other people, because they're going to be like, what are you reading? Take the dreamers out of the world and we would have no reason to study and stand in awe of a great American history. It is us, people like us, the dreamers, who are advancing guard of humanity. Us who dare to execute out of our right selves to change the world. Dreamers. Sometimes called quacks, pipe dreams. Anyway, I'm just randomly hitting some spots. Chaos to cash. Chaos to cash. Success is always organized chaos. That's what this is. All of this shit, these stocks, are in a world of chaos every day. These things, these ideas, these things we're buying, they're in a world of chaos. But because of asymmetric risk, meaning they go up and they go down, they go up, we catch them on the right side and we build it up and we could, sell it later for a lot more money. Meaning the way you do real estate today is the same way my grandfather would have done it in his day. He'd have bought a house, held it, rented it, gone back to it, pulled some equity out, bought some more houses, hold on to it, rent it, pull it out, and in the end he could have sold it to a young little fucker like me who started the game all over. What am I talking about? Meaning prices go up and they go down, and they go up and they go down. And this game keeps going, and due to inflation, it goes higher and higher and higher. When does it end? I don't know, man. Maybe they blow the world up and it all starts over. But this is how the game plays now. And I can't bet based on the future. Some of you guys are into a future where the world is destroyed and there is no money. I don't know what the fuck that is. because I've never seen it. I only play with what I can actually see. Bonds go up and down on good news and bad. Gold goes up and down on good news and bad. Stock indexes, technology stocks, real estate, all this shit. No matter what catastrophic event you may have decided in your mind that has actually never fucking happened. There are people who don't do what I'm showing you because of an event that has never happened, but they think it might. So they're betting, their asymmetric risk is to bet zero because it might go to zero. And that is the dumbest bet of all. So the kid who just bought all Dogecoin is smarter than that dumbass. So the kid who's buying Dogecoin is smarter than the people who aren't investing, period. So people make fun of it. I do. Shit, I'm rich. I'll make fun of you. I don't give a fuck. You probably don't have more money than me. But if you guys who aren't investing at all, you ain't got no right to make fun of them. At least they're trying to do something. They're trying to activate this process of acquiring wealth. They have inside of them this seed that was planted by nature to want to grow and expand, man. People want to grow and expand. People want to get rich. It's inside of you. The science of getting rich opens up with your very why, because that's how you help everyone. That's how you put your kids through college. That's how you help your mother when she's fucking old. Or you could help her with, money's not everything. I think I'll just be happy instead. Like, that ain't helping nobody, bro. The fact that you're fucking happy, that's not helping poor kids. That's not expanding mankind. That's not king shit. Kings weren't called to relax, dude. Kings weren't called to go, what makes me happy? I think I'll focus on myself. I hate that shit, dude. When you get into the quote self-help thing is about self-happiness. What in the fuck are we talking about? Why would it make you happy to only think about you? That literally goes against every fucking religion ever created. You know that, right? I mean, everyone that you respect is not because of that. It's because of what they gave to the world, or that what they pushed into the universe, or the product they made, the book they wrote, the song they recorded, the business they started, the shit they did for people. Nobody's going, man, that guy loved himself, boy. Man, what a great guy. Nobody does that, man. But there's a whole school of thought on that shit. We got sidetracked, didn't we? We got sidetracked. No, it's all right, Instagram. I was just letting you in on a little video I'm recording. It's all right, man. I'm gonna keep recording. We'll do something later. You guys be good.